DeWardre, great to have you with us. So the lockdowns now are basically rolling. I mean, they're in 3 cities at the very least at this point. They've got Macau pretty much completely shut down in terms of all of its casinos not operating, and only essential businesses operating there. So when you say that the impact is just beginning, it's not just economic that you're talking about. Are you also talking about social unrest at this point?
All of that is a possibility, Melissa. Let me say, I wish that I was surprised that we're here talking about this again, but I'm not, because as Xi Jinping has repeated, zero COVID is still the policy of China. And what that means is when there are outbreaks, particularly BA.5, the subvariant of Omicron, highly contagious, that means China's best approach to fighting the pandemic is through lockdowns. It has no mRNA vaccines to do this, a weak health system, an aging population, and they have been fairly successful fighting the pandemic using lockdowns. So I expect that this is going to be a rolling situation, at least until March of 2023 is what many people believe. And, you know, last time I was on, Tim said something that resonated with me. He said, I'm much more interested in policy trends than I am top-line GDP numbers. And I think that's right. But when China reports its GDP numbers next week for the second quarter, we expect that to be about 1.4%. And that is a direct result of China's decision to put pandemic control ahead of economic growth. And so this is going to continue. So I would suggest that investors be a little bit more cautious and less exuberant about China.
DeWardre, it's Tim. So let's go in a slightly different direction, and let's ask policy around economic dynamics as it relates to the currency. So if I look at the yuan or the renminbi, whichever you're looking onshore or offshore, you've had a major sell-off, again, in relative terms for a currency that's highly controlled. Is capital flight something we should be worried about here? And is any of that something that is part of the particular seemingly lockdown of the casino sector? But are you worried about the currency, and are you worried about what they need to do to defend it?
Well, Tim, it's a good question. You'll recall that earlier in the year, there was lots of capital flight as we moved through that spring lockdown. The problem, though, Tim, has been that Western markets have also not been performing well. And so investors are unsure where to go. But I suspect we're seeing a lot of issues, pressure on the renminbi, because people are starting to realize that, in fact, COVID-0 is here to stay for the foreseeable future. And that means volatility in the Chinese markets as well. So I think we're in for a long ride here, Tim, on the currency side of this as well.
In terms of the supply chain, DeWardre, this also means the volatility when it comes to the security of the supply chain, just at a point when companies are starting to say that things seem to be improving at least.
Well, this may sound like a broken record, Melissa, but the last time we discussed this, I said you need a just in case, because this is not going away. I mean, places like Shandong, which has some outbreak that's been reported, 7 ports in Shandong. We know about the port in Shanghai. So there will be impacts on the supply chain, and that will impact inflation in other places. So it's not easy to unwind those supply chains, but I do think companies get the point that they're going to have to find some alternative and start to have a just in case that's not dependent on a single point of failure being China.